It's the rumor that's been around for more than a decade. Will Apple, the largest company in the entire world with the $3 trillion market cap,
wow, that's big,
launch itself into a new stratosphere by acquiring Disney?
Get in the car, Mickey Mouse.
The most recognizable brand in Hollywood with over 100 years of history in the entertainment industry.
I don't believe it. It's been 100 years. Where are you?
Could two of the largest and most recognizable brands in the entire world actually join forces under one brand? Will shareholders like that kind of deal? Will lawmakers even accept that and allow that to be passed? Let's dig into it. Hey, this is Chris, VP of Marketing Stock Dads, and one of our exclusive analysts in our Stock Dads Discord group. We teach people how to trade and invest in a sustainable way to build generational wealth.
Let me create wealth for you.
And there's nothing bigger right now than Apple and Disney. All of this talk is getting hotter and hotter.
Bob Iger, the ultimate deal maker. This could be the ultimate deal of all time.
But why now? These two companies have been linked for over 20 years, back when Pixar was first acquired by Disney for over $7 billion. Pixar was created by Steve Jobs, so there was always a link between Apple and Disney and theories about whether or not the two companies could actually merge together.
I got a lot of time to hear your theories.
Now, throughout the years, most people believe that this was all just hype. However, nowadays, there's actually some synergies that could potentially be formed if these two companies join forces. So we know that Apple, they've become very focused on diversifying away from just being a hardware company into a services company. That's why Apple's valuation has skyrocketed again to a $3 trillion valuation. Disney has pivoted to streaming, but at the end of the day, Disney has been struggling a lot with profitability and managing to turn that streaming business into a profitable business.
Well, it's been rough.
What has happened to Disney's profits? Well, as the television industry has moved from cable and broadcast to streaming, companies like Disney are trading in profitable business segments like ESPN, ABC, to the world of Disney Plus, which is, as of right now, still a not profitable cash burning business. Now, Apple TV doesn't have the biggest market share, currently have about 6% market share of the streaming services business. But if they do want to acquire market share, there's nothing easier than just going out and getting Disney Plus or ESPN or some of the other assets and intellectual property that Disney currently has. The more exclusive content Apple has, the more people that they can keep or attract through their whole ecosystem of products.
And without crocodiles, the whole ecosystem would suffer.
This whole idea of the two companies merging got even more traction over the past couple of months when Apple announced its augmented reality headset, and CEO of Disney, Bob Iger, actually came onto that stage.
We're constantly in search of new ways to entertain, inform, and inspire our fans by combining extraordinary creativity with groundbreaking technology to create truly remarkable experiences.
Now, is that partnership going to translate into a bigger merger? That remains to be seen, but we're going to be discussing some of the pros and cons here, whether you're an Apple shareholder and if you're a Disney shareholder.
So let's just sit here, we'll weigh the pros and cons from a calm place, we'll make a decision.
Now, in my personal opinion, if you are a Disney shareholder, I don't see anything but potential upside here. Disney stock hasn't done great over the past 5 years. If you look at the high back in 2021 to present day, the stock is down about 50%. All of that has to do with the fact that they have been struggling to create as much net income as they previously did in past years. Talking about Disney 5 to 10 years ago, they were generating net income of over $10 billion annually. Nowadays, they're struggling to break $2, $3, $4 billion of net income annually. That's how much money they are burning in order to fund their new streaming business. Streaming is extremely hard. It is absolutely cutthroat, right? With Apple as competition, with Netflix, the huge 1,000-pound gorilla in the room.
See that gorilla down there?
I don't feel like a gorilla.
Even though they're generating more revenue, their revenue growth is 5, 10%, they are still not making as much money as they used to. That's a really bad look. Net margins used to be about 15% for Disney, so it's a pretty healthy, profitable business. But again, now with all the cash that they're burning, their margins are only about 3 to 5%, so it's not doing too great, to be honest. Their most profitable business is the theme parks and the leisure side of Disney, something to consider there. Also from Disney, the company's perspective, Bob Iger has come back from retirement again, and I'm not so sure he wants to stay there for the next 5, 10, 15 years as well. On top of all the political issues Disney has with the governor of Florida, not to mention just the financial issues here with Disney, I wouldn't be surprised if they got a deal from Apple, if they got a good offer, that they just take it, right? And just call it a day, right? Go back to retirement, go back to playing golf, and the brand's gonna be in good hands.
No, let's do Apple quit.
Now, from Apple's perspective, we need to note that Apple is steady and growing, but not growing that much, right? Apple's revenue growth usually tends to be between 5 and 10%. In a good year, maybe 15, something like that. And so it's not a super high growth stock at this point with such a large scale of a business. That's to be expected. They probably are going to need to create new businesses or do mergers and acquisitions to expand their business to other horizons, right? Maybe they also want to acquire Disney to have more intellectual property again and fund some growth.
I have the money.
All right. Let me see it. Show it to me.
Disney does have around a $150 billion market cap. If they do offer a 30-40% premium, as with a lot of these mergers and acquisitions go, give the shareholders a good deal, that equates to over $200 billion market cap probably for Disney, maybe 220. Something like that is probably a pretty good deal, right? It's a good deal for shareholders on Disney's part. For Apple, they can definitely afford to do that. I mean, they can easily just do an all stock deal, issue some shares to Disney, and that's it.
And that's it.
That's it.
That dilution would equate to about 6% of Apple's market cap maybe, and Apple can definitely afford to do this deal. If Apple does go ahead with this deal, combined with their own Apple TV, they're probably going to have close to 200 million subscribers, so they could boast a significant number of users and be one of the largest entertainment platforms out there. They're gonna have intellectual property that includes Star Wars, Marvel, Pixar, Disney, all of those that are huge brands at the box office and also with streaming. News with ABC, ESPN, Monday Night Football, and other sports offerings that could be huge, all of which could definitely have some incremental benefit to Apple. Some analysts believe it could add 10-20% valuation to Apple, maybe even 30%. I would tend to be more conservative there in the 10 to 20% range.
Johnny Law got it though, right?
One question everyone's been asking regarding this deal is, are regulators even going to approve it? I do think it's quite likely that if Apple were to pursue this deal, it would actually go through, because this is not as if Netflix is merging with Disney Plus. Number one and number two, boom, everyone's dead. With Apple, right, Apple TV is a very small player in this game, right? It's not necessarily if Apple takes over Disney that they're going to just wipe out Netflix. I still don't think that will be the case. So the chances are pretty good. It's like Microsoft and Activision. It seems like they will be able to get that deal over the line. If that deal is going to go through, then this would definitely go through.
So what's the bad side?
Now, as for the cons for Apple, $200 billion for Disney, let's say, that $200 billion is a lot of money, and that could be used to acquire startups that do have more potential, maybe some artificial intelligence plays. Some may also question that Disney is not really a growing business and somewhat of a dying business. Is it overpriced still, even at this level? Is a deal, even though it is likely to get approved in my opinion, is it going to be a distraction for Apple as it tries to assert its dominance into artificial intelligence, maybe generative AI plays, some speculative plays like an Apple car? Something like this is going to take a year or two, even if it gets approved. So that's going to occupy a lot of mind share at Apple, and maybe that should be redirected towards other things that are better opportunities. 4, does Apple want to run Disney theme parks? Are they going to rebrand as Apple theme parks? I'm not sure what they're going to do with it, honestly, if they're just going to spin it off. It is the most profitable part of Disney again, but Apple is a hardware company and a software services company. So theme parks and cruises doesn't seem to make a whole lot of sense, because that's not their, again, core competency here. Apple has said it doesn't want to buy studios, so it doesn't want to put all of its eggs in one basket here with Disney. Not sure about that. So you really have to question, does Apple even want to buy Disney Plus? Apple has been on a mission to acquire some standalone opportunities like the documentary series with Lionel Messi after he's moved to the MLS. Sports is seen as a really big opportunity for streaming companies right now. So does Apple want to buy a whole streaming business or just acquire some intellectual property here and there to bolster its own business?
So, where we at with all this?
But understanding the pros and the cons here, at the end of the day, if this does happen, this will be the biggest deal in entertainment history that we have ever seen before. This is going to affect the daily consumption and the lives of hundreds of millions of people globally. It's going to touch everything from TV to streaming to gaming, movies, sports. This is going to be huge if it does happen.
I'm sorry, so where do we stand here?
What's probably most likely is that Disney sells off some of its poor performing assets like ESPN or ABC to Apple, and it keeps the rest of its business, including Disney Plus. In this scenario, Disney goes back to being Disney. Movies, premium TV, entertainment, parks, and merchandise. And Apple gets the brand power of ESPN and ABC to bolster its news and streaming service. That's gonna inject some major sauce into Apple TV. Disney gets a major cash injection to continue to fight the war against Netflix, and its shareholders get some value out of ABC and ESPN before it's too late. Let me know in the comments, who do you think is the real winner if a deal like this happens, Apple or Disney? Do you think the chances of a deal are pretty high at this point in time? If you like this video, please give this video a big thumbs up. Subscribe if you haven't already. Check out the link in the description as well for the Stock Dads Discord group if you want some guidance on learning how to trade and invest the right way. And I'll see you guys in the next video. Take care.
I don't feel like a gorilla.
What kind of a Mickey Mouse operation is this?